One of my smallest investments has produced the highest yield and the most appreciation. It's the MAXI Bitcoin ETF that I reviewed back in February of 2024. And that got me thinking, which other Bitcoin ETFs are paying monthly income and how do they compare? If you're not really into crypto, but you're curious about getting some Bitcoin exposure that pays you monthly in dollars, today's episode will get you up to speed. Hi from Bangkok, and special thanks to the staff at Mu Hotel for letting me film here. An hour ago, this was a breakfast buffet. Amazing. Apart from the MAXI ETF I mentioned earlier, I found 5 other Bitcoin ETFs for a total of 6. We'll look at how much income they've generated, compare their total returns, then we'll look at how they make money. Let's start with the income. These ETFs have been paying out a ton of cash lately. The BITO distributions, BITO, literally look like a roller coaster track. Normally, I'd show you the annual yield for a stock or a fund, but today I'm not going to do that because several of these funds are less than a year old and the last few months have been abnormally bullish, so annualizing those bullish months would heavily favor the new funds. Instead, I'll display the annualized yield for the lowest distribution month and the highest distribution month. BITO paid out half of 1 cent per share in September 2023, so we'll round that down to 0. The highest month so far was June 2024 at $1.76, or actually 1.768, which would equate to an annualized yield of 86% on today's price of $24.67. I had to check that calculation twice because it looked so crazy high. By the way, if you're new to the channel, I retired in 2017, and that's when I got serious about researching my investments in greater depth, and this channel is where I share what I learn. I mostly focus on stocks and funds paying consistent yields of 8 to 12%. Today's ETFs have recently been paying a lot more than that. If you'd like a copy of my portfolio, it's available via Armchair Insider, link in the description, it's free. MAXI distributions do look a little odd. In 2023, they had a policy of distributing 15 cents a month and all excess distributions in December, which turned out to be quite a lot, more than $4. In 2024, they started distributing the excess distributions earlier to spread them out a bit more. $1 a month and then $2 in November. Those annualized yields for the lowest and highest months are based on today's price of $30.07. BTCI is brand new, so it's too early to see a pattern really. However, the fund manager Garrett said they're targeting annualized distributions of 25 to 30%, and so far that looks about right. Based on my experience with other NEOS funds, I expect that BTCI will have the most consistent payouts of any of the funds we look at today. YBTC payouts are all over the place, but even the lowest payout equates to an annual yield of 20%. By the way, these distribution charts aren't available on my Schwab brokerage account or Yahoo Finance. I use either Sydney Alpha or Snowball, depending on which program I'm using at the time. I also use Snowball to keep track of my income. I can rank my portfolio by current yield to see if there's something I want to sell, check the yield on cost, and most importantly, see a calendar that tells me how many dollars will arrive on any given day of the month. Link in the description for a discount and a free trial. YBIT distributions are also quite volatile. The lowest month equates to 58%, which seems extremely high, but this one is from YieldMax, and their funds tend to pay higher yields but underperform in price. The lowest distribution for MSTY equates to an annualized distribution of 66%. That's probably the craziest number for today. I'll explain more about this fund shortly. Total returns combine distributions and price change. Usually, this is a great way to compare investments with different yields. Most of these funds are so new, there isn't really a clear winner, but we can gain some insights using total return. Over the past month, we can see that the highest total return was BITO at 36%, and the lowest was YBIT at 20%. Bitcoin has been on a tear since the election, so that was an abnormally good month. Then when we switched to the past 6 months, there was a breakout winner, MSTY, at 89%, and the laggard was YBIT at just under 4%. Then when we zoom out to the past 12 months, MSTY was also a clear winner at a 271% total return, despite being less than 1 year old. The rest is a bit chaotic because 4 of the 6 funds are less than a year old, which frankly limits the value of this particular chart. Last of all, let's look at the two funds that are more than a year old, BITO and MAXI. If we go back to the inception of the younger of the two, MAXI, in September 2022, their total returns are almost identical at just over 330%. These total return charts came from Seeking Alpha. It's also my primary source for all things income investing related. If you'd like to learn how I use total return charts, distribution charts, and other tools, check out this video, link in the description for the video, and a link for a discount on Seeking Alpha membership. I use the premium level. Bitcoin doesn't generate income all by itself, but there are ways to turn its price action and its volatility into distributions. Let's look at how each fund does that. BITO doesn't hold any Bitcoin. Instead, it replicates the price action of Bitcoin by entering futures contracts. Those contracts aren't purchased for a fee. Instead, they're guaranteed by collateral. It's a bit like doing a home equity line of credit to buy a second house. You use your first house as collateral instead of saving up all the cash. In this case, the collateral is US Treasuries. Whereas options give the holder the right, but not the obligation to buy or sell an asset, futures are different. They are a very specific obligation to buy or sell an asset at a specific price at a specific time. The value of the futures contracts moves up and down with the price of Bitcoin, so they're a fairly good proxy for the price of Bitcoin. MAXI uses three strategies to generate income. The first one is simple. It holds fixed income assets like short-term treasuries, and that pays a small yield. The second income strategy is the use of option spreads. They're called spreads because each strategy involves simultaneously buying and selling the same type of option at different strike prices. Important to note that just like the fixed income I mentioned a moment ago, this strategy has nothing to do with actual Bitcoin. Instead, the options are traded on individual stocks or indexes. The third strategy is what drives most of the price and income, and that's entering into Bitcoin futures contracts. In other words, the strategy I mentioned earlier for BITO. NEOS specializes in options, so as you would expect, their BTCI Bitcoin fund uses options other than futures. Step one is to replicate the price of Bitcoin by trading options on a Bitcoin ETF. That ETF is BITO, the one we talked about before, and the strategy is called a synthetic covered call. They do this by selling a BITO put and buying a BITO call at the same strike price and expiration. The result is that the net price of those two options replicates the price action of BITO, which in turn somewhat replicates the price action of Bitcoin. The income is created by selling out of the money call options on BITO. So to summarize, they sell a put and a call to replicate the price. Those two cancel each other out and don't generate any income. The income comes from selling an additional call option. Let's take a look at the holdings in the portfolio to understand the rest of the strategy for BTCI. The treasuries act as collateral for the synthetic option strategy. They also contribute a little bit of yield. Then there's HODL inside the fund. That's a spot Bitcoin ETF. HODL or HODL holds actual Bitcoin in cold storage. This asset doesn't produce income, but it tracks the price of Bitcoin. I asked the fund manager Garrett about the strategy, and he explained that the goal is to generate a yield of 25 to 30% per year and also get exposure to the price of Bitcoin. This fund, BTCI, is so new that we don't really have enough data to compare it to other ETFs, but my take on their strategy is that it will take more of its return from the price and less from the income than some of the other funds we're looking at today. I'm saying that because it holds that HODL, which accurately tracks the price of Bitcoin. One last point on BTCI, they trade options on BITO, which in turn uses futures to replicate the price of Bitcoin. On November 19, 2024, BlackRock's YBIT fund was approved for options trading. YBIT is 20 times bigger than BITO and doesn't use futures. It holds actual Bitcoin. For these reasons, funds that were using BITO, including NEOS, are working on switching to YBIT. Like NEOS, Roundhill also employs a synthetic covered call strategy on the BITO ETF. Perhaps it will also switch from BITO to YBIT. Note that unlike NEOS, it doesn't hold HODL or any other spot Bitcoin ETF. Not to be confused with YBIT, YBIT is YieldMax's Bitcoin Income ETF. Like NEOS, YieldMax uses options to create a synthetic covered call. I mentioned that NEOS is working on switching from BITO to YBIT. YieldMax is already using YBIT for its options. A key difference between YBIT and NEOS's BTCI is that NEOS holds the spot Bitcoin ETF, HODL, and YieldMax doesn't. For this reason, I expect that YieldMax will pay higher distributions than NEOS, and NEOS will suffer less NAV erosion than YieldMax. There's one more way to generate income from Bitcoin. YieldMax has an ETF that's based on the company led by Michael Saylor called MicroStrategy. This company converted all of its liquid assets into Bitcoin, then issued convertible bonds to buy more Bitcoin. The result is that it's a leveraged Bitcoin play, or Bitcoin on steroids. YieldMax applies its synthetic covered call strategy to MicroStrategy stock, and it has done very well recently, to put it mildly. Before you rush out and buy MSTY, though, you should understand that it hasn't performed well because it's a superior income strategy. It's performed well because the underlying stock, MSTR, has performed on a level that's, well, difficult to comprehend. Bitcoin has outperformed the S&P 500 and the NASDAQ, and MicroStrategy is leveraged Bitcoin. Over the past year, MSTR made Nvidia look like it was standing still. If we compare YieldMax's MSTY to the underlying stock MSTR, we can see that it would have been far better to just hold MSTR. I accept that Bitcoin income funds deliver lower returns than spot funds, as we'll see shortly, but this gap is huge. Now that you're familiar with Bitcoin income ETFs, you should be aware of how they compare to spot ETFs. Whereas Bitcoin income ETFs use options and futures to generate income from Bitcoin, spot Bitcoin ETFs like HODL or YBIT simply hold actual Bitcoin. They don't generate any income. The advantages of spot ETFs are, number one, they're more tax efficient. As a general rule, you pay higher rate of tax on income than capital gains, and spot ETFs don't pay income. Number two, spot ETFs have lower fees. YBIT is the biggest spot ETF, and it charges a fee of just 0.12%. Number three, performance drag. All those options and futures incur trading fees, and over time, the fees eat into the performance. Also, the market sentiment within the options and futures markets themselves can affect performance. If we go back to 2021 and compare BITO to the price of actual Bitcoin, we can see that they tracked fairly closely for quite a while, but slowly BITO began to underperform Bitcoin, and that gap widened during the recent bull market. Next, I'll add the S&P 500 to this chart to make a point about risk. The 2022 bull market was bad for the S&P 500, but compared to Bitcoin, it was a walk in the park. Bitcoin fell about 72% in late 2022. So if you want to play in this sandbox, make sure you can stomach that kind of volatility. The first question to ask is whether you want anything to do with Bitcoin at all. Warren Buffett doesn't like it, but he's a value investor, and Bitcoin isn't a value investment. My only advice is to learn what it is, how it works, how secure it is, what makes it unique, and then decide if you want any exposure to it. My current take is that I want some exposure to it because the upside is greater than the downside. I'm currently at 1% allocation, and I'm open to increasing that to about 5% in the future. The only Bitcoin exposure I currently have is MAXI, and that's mainly because it's been around for quite a while. BITO has delivered similar results. I like the look of BTCI, but it's so new. I also think that that one will be better when it switches from BITO to YBIT. MicroStrategy is a little bit wild for me, but I might pick up a little bit of MSTR next time it corrects. To be clear, holding Bitcoin in your own wallet or holding Bitcoin in a spot ETF will outperform any of these income funds over the long term. I'm not currently doing that because my goal isn't to die with the most Bitcoin or the biggest brokerage account. My goal is just to generate enough consistent income to enjoy the rest of my life. So for some retirees like me, we don't need the highest return. We just wanted to juice up our income a bit. Before I go, I mostly make videos about investments I like, but I like some more than others. If you want a recent overview of my top 10 holdings, none of which contain crypto, click down here. That wraps it up for this look at Bitcoin income funds. More Armchair Income coming soon.
Armchair income, that's my hustle.